As an investor, if you have to know, well, first you have to know where we are in the trend right now. So right now, you know that we're roughly around here. So we're in this part. The institutions could inject more money. We're not at, I believe, like over the 50% range. So it's not a bad buy now, but you just kind of have to know what your goal is to how you want to play the coin. Welcome back, YouTube, and welcome to part 2 of We Need to Talk. Today I'm going to be going over a video. I'm going to write it out for you and explain it as well. And pretty much this video and this chart is going to give you an idea of where we are in the cycle at all times, and also give you entry and exit points so that you can know at what point that it's okay to take profits if you need to, and at what points you need to be buying in. Because you typically, what I'm seeing is people are buying on the bull run and then selling in the correction, and it's literally supposed to be the opposite. You don't necessarily chase bull runs or refuse to buy in corrections because you need someone else to provide that conviction for you. Hopefully this provides some clarity to you and gives you an idea as far as for how to chart the trends so that you can feel more confident in your investments. There are 5 things that I want you to be able to get from this video. One is knowing the history and knowing that this trends upwards, and I'm going to show you that on the chart. Being able to identify where you are in the cycle, identify your entry points and exit points, your goals long-term or short-term, and how to play them, as well as giving you a physical representation of buying the fear and selling the greed. I'm going to post the chart in my Twitter account, as well as create like a copy as far as so that I can utilize underneath the video, and I'll show you an example of what it looks like here. And we're going to go over that in details right now. All right, welcome back, YouTube. So I'm going to make the chart live now for everyone. And what I call this is the flow of the wealth chart. And what it's really going to do is answer 5 important questions. You're going to know where you are right now. It's going to give you entry points. It's going to show you where the history shows as far as trends, your goals, long-term and short-term. And it's also going to give you the emphasis on buying the fear and sell the greed if you need to sell for whatever the case may be, if you just need to take some profit at the time. So what we're going to start with is the beginning. We'll start with Dogecoin here. And typically here you're going to have your early investors, and this is going to be your entry level. You can, and this really works for any coin. You can just say it's at 0.00. And this is going to be, I'll just put entry level, early investors. Okay, so you'll have them buy in and they'll hold their position, and hopefully one day they'll turn a profit. So with Dogecoin's case, you have the early investors, and then you have the most interest gaining here afterwards with Elon. So he'll be your anomaly. The thing that causes the spark, or because everyone has that, Bitcoin is just simply, it's the first, so that's its spark. Everything has like its anomaly, or because right now people are just really gambling and running in just because of the run that Dogecoin has. But the anomaly here for Dogecoin was Elon. So after Elon, we had another boost, and this led to retail investors coming in. So the retail investors, they're going to come in. And these are the early retail investors. These are the one that, okay, now that Elon's on board, I like where this is going, that we can build a community around this. And this is still like a really early phase of investment. And they just really have faith as far as like in the movement. And after this, we all know that institutions invest in the market as a whole. They don't typically pick up coins that are not, I'd say, not in the top 10. So when you have like these catalysts, and as far as the community being in there, they like coins that have a lot of people in them because it gives them floors for when they literally vacuum the market out, and so that they can take profit. So from the retail investors, we'll say institutions, because institutions also liked that Elon was in. So we'll say institutions. Now, of course, the coin begins to rally. So at this point, we're going to have FOMO. And this is the people that seen the coin go from, less than a penny to, well, we struggled at around 10 cents. They consolidated at around 5. And then we've seen it rally past 10 cents. And these are the people that are saying, oh my God, this can be the next big thing. I have 10 cents. I can invest. This can literally go to the moon. Let me get in here. So you're going to have FOMO. And of course, FOMO is also going to just push the coin up. And then at that point, it becomes overbought, if you know what RSI is. And then we'll have the market correction, or the institutions, everyone taking profit, traders. And then of course, this pushes the stock back down. Roughly around the 16 cents range was, I believe, our low. And then the retail, the ones that are long-term, or just the ones that have more experience, they of course are going to invest back in at this point. So for here next to retail, I'm going to put either hold or increase their position. Okay, and so this will technically complete like the first cycle. So this will be like literally like the birth of a coin going all the way through its first cycle. And then you'll have the correction period, and then you retail. So after this, the cycle becomes more condensed, but then you'll have the retail again, and you'll literally pick up right here again. So right across, so you'll have institutions, which is what I believe the reason we all saw these billions of dollars just flow into the market. You have FOMO, which is basically, this right here is where all the people that said it's a scam, it's a joke, it's not going anywhere, it's going to the moon. I mean, it's not going to the moon. You guys are bag holders. This is the point where they come back in. They always come in last. And then the correction happens. And then we have a repeat. And also, what I'd like to point out is these points based off of history. This chart here, you can see an arrow because the correction periods and the highs, they typically trend upward. Now, your entry points. As an investor, if you have to know, well, first you have to know where we are in the trend right now. So right now, you know that we're roughly around here. So we're in this part. The institutions could inject more money. We're not at, I believe, like over the 50% range. So it's not a bad buy now, but you just kind of have to know what your goal is to how you want to play the coin. So if you are a long-term investor, you're typically going to treat this somewhat like an index fund. So you're going to buy in and just increase your coin count, and it's not really worry about the cycles. It's no difference than investing for something you're not going to touch for 30 years or something. You're just going to put money in, ignore the trends. If it's down, you're buying. If it's up, it's buying. You're just investing consistently and worrying about coin count. But from the amount of people that were complaining or just the comments and stuff that I've been seeing, it seems that most people either want to trade this or they don't have the stomach to be in the red. So for this, you have to know where you are in the trend so that you can target, be more specific about your buys. Because if you don't have the stomach to be in the red, what you don't want to be doing is buying here. Because what you're going to do is just send your DCA way off the charts, and then you're going to have to be in this correction period, which can easily last 10 months. That's what you don't want to do. It looks like these correction periods are getting shorter and shorter just because of the amount of people that are rushing into the market. But based off of history, that's what history says. These consolidation periods can last for a really long time. But I do believe as we go in the future and more people are pouring into the market, that these will eventually condense to a shorter time span. The second thing is after you identify where you are as far as like in history, you have to determine, okay, am I a long-term or am I short-term? If you're short term, you're going to have to make sure that you're either buying here before the institutions get in. And I mentioned this in my last video, and I made a few posts about this. Let the institutions push your investment up, not the other way around. Because if you're sitting here and you have no faith or conviction in your investment, what you're doing is you're waiting for some validation. And the institutions come in, they're going to make their money. So what they're doing is pushing the stock up, and you're going to be like, oh my God, some action. And then you rush in there, and the institution pushes it up, and you're like, oh my God, to the moon. Then FOMO comes in, it goes up even more, and you're thinking the stock is going to rally, and then institutions take profits, the traders take profit, and then boom, we're back down again. And that's typically the cycle, and that's Dogecoin, no matter what crypto coin you're looking at. So institutions, another thing that they like to do is the reason that they have the certain coins that they like to invest in or pump money into, they like to invest coins that have a large community and they have convictions. Because let's say that Jeff Bezos wanted to sell his Amazon stock. So they'll say, oh, Jeff Bezos is worth $200 billion. Well, that's debatable, because if he began to unload his stock, the more he put into the market, the less it would be worth. So he would have to have a lot of people to kind of hold the stock while he's unloading, to give it some, to create floors and also create some stability. Otherwise, it'll just be a straight shot downward. So that's the reason, that's one of the main reasons that these institutions and banks, etc., pick these, and funds and hedge funds pick certain stocks that have a lot of people in them, so that it'll allow them to be able to dump and not necessarily send it to zero, so that they're missing out on the maximum opportunity to gain profits. So when you say that, okay, why Dogecoin, why Ethereum, why Bitcoin, these are the main catalysts right now. These are the main cryptocurrencies. There's a lot of people holding them. There's big communities around them. So when you're saying, okay, I want to turn a profit in crypto, I'm going to flip crypto, I need for a large community to be in there, so that if I unload, or if I take out, you know, $1 billion, or if I take out 600 billion of Bitcoin, that it won't go to 500 bucks while I'm unloading. Buying the fear and selling the greed. So this is what you're going to do. So if you want to take profit, or if you're over leveraged, or if you need to, you know, if it's simply not working on your time frame, you want to make sure that your DCA is long enough or low enough that you can take profits either after the institutions or after the FOMO period. But this is the importance of averaging down, because when you see the floors and you have some resistance levels, and you start getting a few good bounces off of like an entry point, you want to determine, that's what you want to use to determine your entry. You want to use typically before the institutions. It's not, if you're going to trade, it's not necessarily bad to get in after the institutions, but you just really have to know what you're doing. So as I mentioned, whatever the high of the coin is, whether that's Bitcoin, Ethereum, when you have a correction period, you can typically assume that this is going to go down by 50 to 85%. Usually it's 50 to 80, but we do get that overshoot sometimes. So if you have 72, if we peaked at 72 cents, it's safe to say that it can go down to as low as 14 cents in that consolidation period. And whatever the high is for here, let's say, I don't know, $1.50, you can take that and average it down by, you know, 75 or well, anywhere from 50 to 80 cents. So it's just 50 to 85 cents. So it just gives you a range that you can use to determine like a floor. And that typically once you get in that range, and investors, traders, typically they like to buy things that are that far off, because there's a lot of room for profit once you buy it at such a steep discount. I don't know why, but that's just the history of the crypto market. So, you know, I didn't set these percentages. I'm just looking at charts and coming up with averages. So typically those are good entry points. So that's why when it was close to 16 cents or below 20 cents, I was like, okay, now is a great time to buy. And I started calling out the walls as far as the traders, and they're bouncing it around 20 cents. This will happen again several times before we get to $1, by the way, as we trend upward here. I'll give you a better look at the entire chart here. So typically this is going to be the flow, and it will trend upward. So you will have the catalyst here, and the slows will condense, but typically they're trending up. I appreciate all of you. I hope that provided some clarity for you and was hopefully able to answer some of your questions. If you have any thoughts or concerns or questions, please let me know in the comments. I'm always looking to improve and grow. So just please communicate that in the comments and I'll get back to as many of you as I can. If you haven't yet, please don't forget to like and subscribe. It helps the channel reach more viewers and it also helps them see a different perspective. This is really what the stock market is, or investing is. People have many different approaches and you're going to have to determine what's right for you. So that's one of the things that I like doing, is putting information out there. So hopefully you can just get a different perspective and gather more knowledge to make the right choices for you and your household. I have the link to my Twitter and my Instagram in the comment section if you'd like to follow me there. I appreciate all of you. Thank you. And until next time.